Back, shares of hair care company Olaplex are trading about 19% higher in their trading debut on the Nasdaq today. The share is priced at 21. It's currently around 25, and the $21 mark was even above the 17 to 19 expected range. Joining me now for a first on CNBC interview is Olaplex President and CEO Julie Wong. Julie, congratulations and welcome.
Thank you so much for having me.
I want to talk about the technology here. You guys have over 100 patents. You're the #1 hair care brand at Sephora. What makes your products different from everything else that's out there on shelves?
Well, truly, if you think about it, we are a patented, potent, and proven hair care technology system. And what really differentiates us is that by having those kind of equity, we are able to really get your hair to its healthiest state possible. And that, I think, is what 91% of women who are searching for something that they have damaged their hair with for a solution, and we are their solution.
You created this category, the bond building category, back in 2014. What's bond building?
Well, if you think about it, your hair has a lot of disulfide bonds. And when you go through any kind of damage, whether it's in salon services like chemical bleaching and lightening, or just in the environment with the pollution or the light refracting off your laptops, environmental, like I say, pollution, as well as mechanical when you comb your hair, and just normal cause of aging, hormonal. Those cause your bonds to be damaged, and what we do is we relink those broken bonds.
How do you do that? What was the research and development involved, and why couldn't other companies catch up?
Well, we have a technology that basically what happens is any time when your bonds are broken, your cuticles are exposed, and it is important that cuticle get repaired. And with that, we have had patents that, with the 103 patents that we have, really helps to address that. And because of those patents, it is very difficult for a competitor to come in and try to make that, part of their system.
How big could you grow, and do you face any bottlenecks right now? Because I think Kohl's this morning was actually just downgraded, and Kohl's has a lot of Sephora locations at its stores, and obviously you're the #1 hair care brand at Sephora, because of these supply chain issues. Is today's environment more difficult to grow and scale in?
Well, for us, what we have a competitive advantage of is that our SKU count is very tight, our distribution is very disciplined, and so as a result, any time that there's a supply chain issue, we are ahead of the curve because we control the relationships that we have with our manufacturers, with our suppliers, and with all of our raw material vendors.
Can you also, as a sort of final comment, tell me about profit margins? And, with the kind of product you have, I have to imagine you have a decent amount of room to raise prices. Your end consumer might be in pretty good shape, especially if they have exposure to the stock market and things like that this year. So have they generally been expanding, or do you face the same headwinds some of the other companies we've been discussing are?
So if you look at it in our S1, you saw that our gross margin is very healthy. And the reason why that is that we are able to be very efficient. Again, like with our supply chain, with our R&D, and with our product development, I believe that as long as we can continue to deliver on those performances, there's no need for us to work on anything in terms of pricing because our quality is already speaking for itself, and we feel like ultimately the consumer is going to vote with their wallet. If they are willing to pay up, they will show us. But at this point in time, we are very happy serving them with what they want and what they need.